Hi guys, I'm going to be talking about SRP 500 today. Um, SRP 500, the last trade that I took a loss on the SRP 500. I took about 200 pips stop loss. So I will be going through what I did, how I thought about it as of the time that I took the loss, and I'm going to be looking for what I am looking for to be trading ahead for the week ahead. So I'm looking presently on the monthly time frame. I'm looking at what SRP 500 is. So as you all know, I come to my monthly time frame to mark out my key levels. On the monthly time frame, I just mark out the most important key level that I'm seeing. If you see this market is giving you higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, lower, kind of a equal low, higher, high, higher, low, like higher high presently. So expectedly, I'm expecting this market to presently, as of the moment, the market is still bullish. So if you swing your Fibonacci from swing low to swing high, if you bring out your Fibonacci, swing it from swing low to swing high, from swing low to swing high. So expectedly, why I sold this market a little bit was because of this Fibonacci that makes me lose the market. But however, because normally a 0.27 Fibonacci is always where the market normally retrace at the 0.27 Fibonacci. So that is why I was like expecting that this market is about to retrace at this region. That was why I sold. But overall, the market is still looking bullish. However, I was too fast to sell the market because if you see the last monthly candle that closed, and the last monthly candle that closed was still bullish. So what I'm going to do is this. I will come back down to my daily time, my weekly time frame and check out what the market is doing because this month candle is still looking like a hammer candle as of the moment and a weak rejection. So this present month that is forming is presently looking like a weak rejection to me as of the moment. So I'll come back down to my weekly time frame. I'll check what is the market doing on the weekly time frame, which is very important to me. So if I come back down to my weekly time frame, so at the weekly time frame, I'm looking at two things. What is this market forming? Before I place this trade for a sell, I saw a double top here, which I'm going to mark out. This is an important level, a double top. So I also see this is also a major level. Remember, on the weekly time frame, I mark out the semi-major level, like the level that are not as significant as the ones that I mark out on the monthly time frame. I mark out the ones on the weekly time frame as well. If you check in this area, this is looking like a semi-major level to me as of the moment. This is a two uh two this is the two levels that I'm looking at as of the moment. And if you check, what is the candlestick for me? What is the chart pattern that I'm seeing here? I'm kind of seeing like a double bottom, a double top here as of the moment. But this red candle here, this bearish engulfing red candle is not signifying reversal at this point. What I notice is that it's signifying exhaustion. It's not signifying reversal at this point. It's signifying exhaustion at this point. So I'll come back down to my daily time frame. If I come back down to my daily time frame, what am I going to be looking at in my daily time frame? I'm going to be checking what exactly is the chart pattern that I'm seeing on the daily time frame. If you look closely, you're going to see like this is looking like the head. This is looking like a left shoulder kind of. It's kind of a jagged invert. It's not like the most cleanest head and shoulder pattern. But if you see, when I come back down to my daily time frame, it's looking like this is looking like a head, this is looking like a shoulder, this is looking like another shoulder, and this is looking like the neckline. So why I took this trade, I'm going to tell you the reason why I took this trade. Why I took this trade was because of this. I broke some of my rules, and some of my rules for taking a trade is this. I will go back to my 4 hour time frame and show you exactly where I took this trade. This candle, hammer candle here that I see was where I took this trade. And this weak rejection as of this moment is as of that moment, it's looking like a bearish candle. But remember that this candle that closed, I always tell you that this candle that closed is a significant level. It escaped my memory at this point. Why? Because this is a hammer candle. This is not a bearish form of candle. If I'm looking for a sell, I should be looking for a kind of a bearish formation the previous day. I make sure that I look for a bearish kind of candle from the previous day. This is not a bearish kind of candle, number one. And number two, I also missed I also missed the pattern that I normally use to draw the trend line. And if you look properly, as of that time, I drew my trend line like this. And this was looking like a candle close on the 1 hour time frame. So, and if you look at this properly on the daily time frame, it's still looking like a hammer. So that is why this was a weak rejection. And I entered this market on the 1 hour time frame, which is not ideal. I normally wait for the 4 hour candle close. And if I waited for the 4 hour candle close before I entered this market, this would have not been a mistrade. I will have not even entered this trade at all. And if you come to think about it, this trade is now looking like a head, a left shoulder, like a right shoulder, like a jagged inverse head and shoulder pattern. So what am I going to be looking for this trade henceforth? Since I know that that candle formation was an since I know that that candle formation was an exhaustion, not a reversal at this point, because this is looking like an inverse head and shoulder pattern on the daily time frame. So what I'm going to do is I'm going to check the structure. Anytime I want to place a trade, I will check the structure and the candlestick as of that time. What is the candle giving you as of that time? Is it like a head and shoulder pattern or an inverse head and shoulder pattern? Those are the kinds of things that I'm looking for. So I will draw out my minor level around this area. I can see a minor level around these areas of the moment. So I'll push it forward a little bit forward because there is a choke around this area. So what I can see as of the moment is this. I could see a big inverse head and shoulder pattern, which is the head, the left shoulder, right shoulder. It's not looking so much like an inverse head and shoulder pattern though, but I could also see a head, a left shoulder, and a potential right shoulder around this area. So what I'm going to be looking out for the 4 hour time frame, on the 4 hour time frame, maybe there's going to be a correction at this place, but I want for me to see a bullish kind of pattern here, like a bullish, even if I see a red candle around this area, I'm not going to sell when I'm still seeing something red around this, except if I see a red with a weak rejection around this area, then I will be considering a buy. But this is look like something like this to me as of the moment. It's going to be looking something like this to me as of the moment, because I could see an inverse head and shoulder pattern around this area. So this is what I'm looking at for SRP 500. I'm looking at something like this, then like this to the upside. So if I want to place my trade, what I'm going to do is this. I'm going to be looking for a trend line around this area. Like normally the trend line is supposed to be around this area. So I'm going to be looking for a trend line around this area. Then I'll be placing my trade around this area. I need to see a bounce from this area. I need to see a bounce before placing my trade. I need to see a bounce. Remember, on the daily time frame, I need to see a daily candle telling me that it's going up after the red candles. Then on the 4 hour, I need to see a bounce from this area. This is also kind of the neckline of this area. I need to see a bounce. Then my stop loss is going to come at this low. My stop loss is going to come at this low. This is where I'm going to put my stop loss. My stop loss is going to come at this low. So this is what I'm expecting for and my first level target is going to be around this area. Wait, Look at my first level target. This is how I get my first level target. I'll look at my daily time frame. I'll draw my Fibonacci, mark out my Fibonacci on the daily time frame. Okay, this is going to be my first level target from swing low to swing high. Wait, this area is going to be my first 0.27 extension is going to be my first level target for Fibonacci. So I'll just bring my Fibonacci to this region. That is going to be my first level target. So my first level target that I'm going to be taking out my profit, of course, is going to be this 100% retracement of this move. When they come back down, I'm going to take my first level target profit around this 100% retracement, move my stop loss past break even at least. I take out 40% of my position, move my stop loss past break even, then allow the market to get to this area. When the market get to this area, then you might see a retest or a continuation to the upside. That's my analysis for SRP 500, and that was my loss that I took. So this cost me 200 tips. So uh, I'm looking forward to taking this trade to this upside. That's the end of my analysis for SRP 500 as of today.